I just published my $1 million net worth video on the last day of 2024, which is 31st December. So I guess the most common question about this is how do you even reach to the $1 million net worth, which is why I'm really documenting this series from the $100,000 upwards, and I call this the 100,000 series. So every $100,000, I will share my thoughts and my situation and even my salary back then if it was relevant to you. The quick answer to achieve the net worth is that there is no fast method, there is no 10x stock counters, there is no crypto involved, and the truth is there is no fast way. There is only step by step and taking risks when the opportunities arise. To be completely honest, the first $400,000 came even before the start of my YouTube channel in 2021. So before 2021, all this wealth is really accumulated through hard work, side hustle, and investment opportunities. Okay, there's no like content creator, there's no affiliate marketing thing, there's no sponsorship that you see people sharing online. Okay, nothing of such thing before the first $400,000. So if you're new to this journey, on my first $100,000, I hit it at age 25, which is the video right here in the thumbnail. And then by the age of 27, I hit the next $100,000, which totals up to $200,000. So you see, that's a 2 years growth, right? 25, 100,000, 27, 200,000. So does it mean that by 29, I should get my 300,000? Yes, because this is exactly what this video is about, 300,000 net worth by 29. So it's like a good progress. Every 2 years, you can see the compounding starting to take effect. So going by this growth rate, it may be even more than $300,000 by 29, right? We shall explore more in today's video. And if you want to follow like-minded people on their financial independence journey towards financial freedom, then join us at over 19,000 members in the Honey Money SG Telegram group for free and build your wealth. Quick recap, in my 200k video, I reached it by 27, which is the year of 2018. And then 2 years later, I hit my $300,000 net worth in the year of 2020, which is a COVID year. But I forgot to mention one privilege that I had since the start of the 100k series, and that is the employee share purchase plan, or we call it ESPP. Not to be confused with employee stock options, not ESO, it is ESPP. So what ESPP essentially is that your company is offering you to buy the company shares at 15% discount, usually 10 to 20% depending on how your company benefits are, using a portion of your salary, which is capped at a maximum. Otherwise, your high executives can buy entire shares using their salary, right? So there's a cap, but you'll get 15% discount off the market price at the specific date. And I subscribed to my ex-company's ESPP since the start of my employment because I was looking at this poster on the notice board like, what a good deal, eh? Like free money, or free 15%, eh? Because back then I already understood like stock market and equity. So I just signed up for it the moment I knew about it. So for those of you who are subscribed to your own company's ESPP, I'm very sure you have this feeling, right? It's like minimal risk, maximum rewards. You get like 15% almost risk-free. And that's even if you sold it on the issue date to minimize any potential losses that may come from the market fluctuation. And note that I'm not talking about employee stock options because that's a totally different benefit scheme. ESPP is literally buying your own company shares at a discount. But are there risks or not? Definitely yes, because there's high concentration risk. Firstly, you're already working in the company. Then secondly, your job depends on whether the company is doing well. Because if the company is undergoing a downturn, firstly, the stock price may crash, and secondly, your job may be jeopardized and then you may be out of job. So it's a double whammy, right? Your shares get, devalued, and then your own job gets misplaced. Then you got no income. You need to look for another job. So that's the concentration risk. But I guess it turned out well for me because the company stock did appreciate over the years, even though it's not like astronomical growth like the US tech giants. But I'm glad that at least it appreciated better than the Singapore stock market. So it's almost like dollar cost averaging like a regular savings plan, right? Because every quarter it will deduct your salary and then, buy into the company share at 15% discount, which is pretty good. And I consider this a privilege because not all companies have it. And even if those companies have it, the share price may not be appreciating over the long run. And I only sold some part of the share after I left the company. And by the way, the 15% savings is a taxable income that you have to pay on part of your income tax because this is a benefit, right? Your employer is giving you this 15% discount, and that's why it will be a taxable benefit. So that's some ESPP knowledge for some of you. And of course, if you want to transfer the shares out, I'm very sure there are ways to do so. Like before I left the company, I did transfer out those shares to Interactive Brokers, which is why you should check out Interactive Brokers. They offer free transfer in of your company shares. If you are into ESPP and you're leaving the company, then of course you want to transfer it to your personal brokerage account, right? That's why Interactive Brokers is here to save you. And that's what Interactive Brokers did for me. So sign up for Interactive Brokers or check out the link right here to get your Interactive Brokers account right now. So coming back to the main story, in 2019, I'm still working full-time corporate job. Plus, I had a side hustle. And in my year 2019, it was a milestone year because I completed my purchase of my BTO. So paid my down payment, the first down payment, then waiting for it to construct. And since I already bought my BTO, I already know how much are my mortgage commitments, and I've accessed OA, and back then CPF investment options not as much as now. So I transferred my OA to SA for the very first time. Nowadays, you have much better investing options, which is why if I were to put myself in the same situation, I may not have transferred OA to SA, I would just invest my OA directly. And one of the good platforms that you can invest your OA in is Poems, because in Poems you can invest in a Monday Prime USA fund or a Monday Index MSCI fund, which tracks the market index, so you can track like market returns. You don't need to pick your own stocks and then worry whether the stock fall up or down. So if you want to invest your CPF OA, highly recommended they use Poems to invest because zero sales charge and zero platform fees. Plus, there are attractive welcome offers, which you can refer it to my referral link right here to get the latest sign-up gifts. But in 2019, it was a pretty good year for me because even though I was majority invested in the Singapore market, REITs did experience a super good rally. I think it was around 18% based on this article, and it was one of the best years for Singapore REITs in a low interest rate environment. So all the distributions and dividends that I received from my Singapore stock investments were all reinvested back into the Singapore stock market. And in 2019, I still had zero US exposure, so my portfolio is just growing like single digit growth. But I mentioned that I did start a side hustle, right? Because in 2019, I start to sell on Carousel, buy low, sell high. Primarily, I'm focusing on high ticket items like mobile devices and wireless earbuds, because back then they were like quite new, right? The wireless earbuds thing. And then I could see the trend that more people are ditching away their wired earpieces. So I think that was a good market to venture into, started selling, and at the same time, I earned a lot of cashback points and miles because I was in the e-commerce business, right? I have to, buy my inventory first and then sell it to my customers later. So it's like a merchant trade business lah. You buy low and you sell high. But of course, that involves a lot of effort, a lot of planning, and I learned a lot of skills through that hustle. I learned to deal with customers because there is customer service, and then logistics, and then inventory handling, and then accounting and admin. All these things that you will never learn in your job if you are not exposed to it. And I could give you a quick tip for those carousel/e-commerce people. December will always be the best month for sales because everyone is getting their bonus and everyone has excess savings for a full year of hard work. So they need to reward themselves, right? So they need to buy all these expensive things either for themselves or they want to give it to their family and friends. So December is usually the best month for sales. So that was for year 2019, right? Pretty fantastic year. Stock market all-time high for the REIT section. Then, coming to year 2020, something has changed and evolved. And that is COVID, which started the onslaught of the market crash, especially during March 2020. So I'm sure many of you remember COVID because that was such an impressionable year. And we started working from home. There were a lot of expenses that were cut. Firstly, we don't have transport expenses to travel to and through the office. Secondly, we don't have to travel. Thirdly, we have less social meetups, which means that we have less dine out expenses because everyone has to tap out the food and then we have to go through safe entry. I'm sure you all remember that. And I was still doing my Carousel side hustle after they ease out on phase 1 or 2. Can't remember. But I think there was slightly more demand really, because everyone work from home, right? So they need a new mobile phone, they need a new wireless earbuds, and everyone is taking Zoom calls, so the sales really skyrocketed. But of course, to keep myself safe during COVID, I did hire delivery services like Grab Express or Lala Move, all these delivery companies. And the fact that people could not travel, which means they have more disposable income and they can spend on other things like mobile gadgets and earpiece. So I'm sure most of you also remember the dip of March 2020 where stock market really crashed until you don't recognize your father and mother. And that was really quite depressing for the few weeks until the Federal Reserve of US announced unlimited QE, which is quantitative easing. And then the stock market just went through a V-shaped recovery. And that was when I started to buy US individual stocks. And back then, the first broker that I bought it on was Tiger Brokers because they were one of the first few entrants which allow Singaporeans to buy US stocks at a relatively low cost compared to the traditional brokers. And thank you to Tiger Brokers for that, which is why I'm still a partner with them. And if you want to sign for Tiger Brokers, you can use the link right here. This video got no sponsor, don't worry. But as a new stock picker on US stocks, probably I don't know what I'm doing, which is why sometimes I buy high, sell low, because didn't expect that US stocks, wow, the volatility is unlike Singapore stocks. And in 2020, I was in my finance role doing full-time financial planning and analysis, drawing around 4.4K by that time. Not consider high income, right? This in year 2020, And in year 2020, it was also my second time to contribute to SRS for tax relief functions. So I figured out that, okay, this year I think the income a bit high, I need to reduce a bit. So I contributed a little to my SRS account. And with that contribution to SRS was my first investment into Endowers in December 2020 using one of their flagship portfolio or dimensional funds, cannot remember. I think it should be one of the dimensional core funds because that was the year I joined 1M65 Telegram group as well to learn of how to invest your SRS and CPF and the further knowledge that I learned along the way. So if you're curious about the numbers, here is my portfolio allocation as of the year end of 2020 December. Firstly, 204,000 in stocks, which 20% comprise of US, then 80% Singapore stocks. So you see there's a shift of the balance, right? No longer 100% Singapore stocks, at least 20% US stocks. Can't remember what stocks I hold back then, but mostly individual stocks, not S&P 500. And then I had $8,000 in bonds. I had $5,000 in SRS with Endowers. Back then was a dimensional fund portfolio. And then I still had $133,000 in cash, which represents more than 1/3 of my cash allocation in the portfolio because I'm still afraid of the market crash after the COVID PTSD. It was really quite scary, like the major financial crash after I started investing. Nothing as major as COVID crash. So my total net worth in terms of portfolio value was $350,000 by the end of year 2020 December, and that is like 150,000 increase from 2 years ago, right? In 27 that was 200k flat. In 2018 at age 27 I ended the year at 200k flat, and then in the year of 2020 at age 29 I ended at 350k flat. So that's like a good 150k increase over 2 years, which I'm quite proud of. I mean, back at the time it was astronomical, but I guess it comes with experience, right? Because this was a time before I started YouTube. There was no astronomical income. At best, there was a side hustle that was self-regenerating and quite lucrative during the period of COVID. If I were to put the same business model now, it definitely would not have worked as well. So, 时势造就人 I believe times and environment will be a good factor of whether you will succeed in the current destiny or dynasty. So this is for the 300k net worth video 2020 age 29, which is like a short distance to the next milestone of 400k, right? So I guess I will share the 400k video very soon. So comment 400k plus one if you want to watch that video documenting the net worth. And this was all before the start of my YouTube career. And if you want to look at my previous journey, how did I achieve the first 200k without a high salary? Okay, then you can refer to that video right here. It's part of the 100k series.